morning, today is Sunday the 6th of September 2009 and I'm Kate with your week in Forex from UFXBank. Today we're going to be taking a look at one of the most important economic events of the month, the non-farm payroll. I'm here with Martin Smith, who is an analyst. Hi Martin.
Hi Kate.
So what was the outcome of the non-farm payrolls?
Well, the report showed that the non-farm payrolls declined in August by 216,000 jobs, following the prior revised estimate of 276,000 jobs that were lost back in July. However, this was better than the median estimates of 230,000 lost jobs. Also, the unemployment rate that dropped back in July for the first time in 19 months rose again in August as unemployment went up to 9.7%. from the prior estimate of 9.4%, well above median estimates of 9.5%, and it now seems that unemployment will top 10% before the year's end.
What effect will this have on economic growth?
Well, as we know, rising unemployment has been weighing heavily on economic growth throughout this recession, as it directly impacts income growth, and as a result, of course, consumer spending. This, of course, accounts for nearly 2/3 of economic activity in the US, and what with tightening credit conditions, we can expect the economy to remain weak over the upcoming period.
So what about actual number of jobs lost then?
Well, the non-farm payrolls reports, they basically showed that manufacturers shed something like 63,000 jobs in August, while the construction sector shed 65,000. Service providers shed 80,000 jobs, and the trade and transport sector accounted for 28,000 jobs. Retail was also affected, with 10,000 job losses, and information shed 10,000 and financials 28,000. As for the business services sector, this was in the region of 22,000 jobs lost in August, while temporary help shed 7,000. Government 18,000 and leisure and hospitality 21,000. In fact, the only sectors to add jobs were education and health, adding a combined 52,000 jobs in August.
What are your thoughts on the future of the unemployment rate?
Well, the Fed's announced at their FOMC meeting that unemployment will continue to rise over the course of this year. And the Fed's also stressed their concerns over the outlook for economic growth, as rising unemployment will continue to weigh down on economic activity, which means that the Feds will continue their focus on growth until conditions in the labor market stabilize. But unemployment will probably continue to rise, I imagine, over the first quarter of next year as well, before it gradually begins to drop back. Because even if companies are convinced that the recession is over, they won't start hiring new employees while demand levels are still subdued and weak. And this, of course, means the economy will probably continue to underperform its long-term growth potentials, at least over the first half of next year.
So, how have the currencies been affected?
Well, the dollar and yen dropped against most of their major counterparts. Investors who were optimistic that the global economy would quickly recover bought higher-yielding assets after a report showed US payroll losses slowed. Canada's currency was the best performer against the yen, as the government reported the first gain in jobs since April. And US Treasury Secretary Timothy Geithner reaffirmed this week his commitment to supporting the global recovery before meeting with a group of 20 in London today. The euro rose briefly, it then approached the lowest level this week about 30 minutes after the report, and then resumed, gaining from about 11:40 a.m. to its intraday high of 143.27.
Martin Smith, thank you very much. And thank you for watching. Visit us at UFXBank.com for simple, safe, secure trading.